How to start investing with little money. For example, $50 a month. Do you feel like you're stuck on the sidelines of the financial world? You hear about people making money in the stock market, building wealth, and securing their future. But you look at your own budget and think, I don't have thousands of dollars to spare. Investing isn't for me. What if I told you that the key to starting your investment journey isn't a huge bank account, but an amount as small as $50 a month? In the next few minutes, we're gonna shatter the myth that you need to be rich to invest. We'll give you a clear, step-by-step roadmap to turn that $50 into a powerful engine for building your wealth. But before we dive in, if you're serious about mastering your money and achieving financial freedom, take a moment to subscribe and hit that notification bell. You won't want to miss the actionable insights we share every week. Welcome back to FinEdge, the edge you need to succeed. Let's be honest, the biggest problem isn't a lack of desire. It's intimidation. You see a single share of a popular tech company costing over $1,000 and you feel priced out. It's easy to conclude that your $50 is just a drop in the ocean, too insignificant to make any real difference. This thinking is the single biggest barrier keeping most people from building wealth. The solution isn't to wait until you have more money. The solution is to understand the force so powerful. Albert Einstein reportedly called it the eighth wonder of the world. Compound interest. Compound interest is simply your money making money. Here's how it transforms your $50. If you invested just $50 every month and earned an average market return of 8% per year, look what happens. In 10 years, you'd have invested $6,000. In 20 years, you'd have invested $12,000, but it would grow to over $29,000. And in 30 years, your $18,000 investment would become a staggering $74,000. That's the solution. It's not about getting rich quick. It's about letting small, consistent actions compound over time. The problem isn't your income. It's your starting time. So, the next logical question is, where exactly do you invest that $50? Here are 3 of the easiest and most effective methods for beginners. 1. Robo-advisors. First up, robo-advisor. Think of a robo-advisor as a digital financial expert that does all the hard work for you. Platforms like Betterment or Wealthfront in the US or Nutmeg in the UK are perfect for beginners. You simply answer a few questions about your financial goals and risk tolerance, and their algorithm builds a diversified, low-cost portfolio for you. They automatically manage and rebalance your investments. Most have very low or no account minimums, making them perfect for your $50 a month. This is the ultimate set-it-and-forget-it solution. 2. Fractional shares and ETFs. Second, embrace the power of fractional shares and ETFs. Remember feeling priced out by that $1,000 stock? Fractional shares solve this. Modern brokerage apps like Fidelity, Charles Schwab, or Robinhood let you buy a small slice of a share for as little as $1. So, with your $50, you can own pieces of dozens of your favorite companies. Even better, you can use that $50 to buy into an ETF or exchange-traded fund. An ETF is like a basket containing hundreds or even thousands of stocks. For example, an S&P 500 lets you own a tiny piece of the 500 largest companies in the US with a single purchase. This gives you instant diversification, which is key to managing risk. It's the strategy recommended by legendary investors like Warren Buffett. For most people, 3. Micro-investing apps. And third, consider micro-investing apps. Platforms like Acorns or Stash are designed to make investing feel effortless. The most popular feature is roundups. When you buy a coffee for $3.50, the app automatically rounds the purchase up to $4 and invests the extra 50 cents for you. Those small amounts add up incredibly fast, often helping you invest your $50 a month without even feeling it leave your bank account. It's a fantastic way to build the investing habit painlessly. Okay, we've covered the why and the how. Let's put it all together into a simple 3-step action plan you can start today. Step 1. Choose your platform. Don't get stuck here. Pick one of the options we discussed. If you're unsure, a robo-advisor is arguably the most straightforward path for a complete beginner. Step 2. Automate your investment. This is the most crucial step. Log in to your new account and set up an automatic, recurring transfer of $50 from your bank account every month. Automation is the key to consistency. It removes emotion and ensures you stick to the plan. Step 3. Be patient. Do not check your account every day. The market goes up and down. Your job is not to time the market, but to give your money time in the market. Focus on the long-term picture 5, 10, 20 years from now. Starting your investment journey isn't about having a huge pile of cash. It's about making a decision and building a habit. That first $50 is the most important one you will ever invest, because it's the one that gets you started. Your future self will thank you for it. If you want to continue learning how to make your money work for you, be sure to visit our channel and check out our other videos on building wealth and achieving financial independence. Thanks for watching.